Alright, so hello guys, how are you? And wonderful Saturday and happy weekend. My name is Vladimir Ribakov. I believe most of you know that. Those who see me for the first time, hi and welcome. For the first time, I decided to do something new. Give it a chance, give it a test. We are going to analyze the market live together. We're going to go over the best opportunities, explain how all this money flow works and where should we put our focus, what are our levels for validations, invalidation, and prepare the entire week for trading. So that's our plan for today, for this beautiful live session. Thank you very much for coming. I appreciate that. And let's see who is here with us today. So first of all, hi from Canada, Ontario. Well, I would show that. Let's see, we'll see it from here. All the snow is already started to grow. That's pretty cool. Beautiful white color. So where are you from today, guys? It is live, it is live. You see? Hello. It is live, and yeah, that's just for the first time what we do. So I want to see how it goes. I want to see your reaction, guys. So you see me going over the charts live, so it's not like all edited, all prepared, all done completely as a package. See that live, all the thoughts, right? All the maybe yes, maybe no doubts we have as traders. So we have hi from South Africa, Norway, Turkey, New Mexico, Tunisia, Thailand, Poland. Perfect. Thank you very much for making it, guys. Really appreciate it. It's Saturday, I know. But it's weekend anyway, right? The week starts tomorrow. Trading week starts tomorrow, so we anyway have to be prepared. Alright, so as I said, those who don't know me, my name is Vladimir Ribakov from Traders Academy Club. The idea here is very simple. We go live over the charts. I'm going to cover Forex. I'm going to cover commodities, indices, because they start to provide some sugar opportunities, which we should be looking to trade. And I will cover also what's the best way to describe that? The new financial market, the new innovation, maybe, and just maybe, the future of trading. I'm talking, of course, about cryptocurrencies. On the last several weeks, I've been covering that on my videos, weekly videos. You can see some great opportunities. Ripple is taking off, Litecoin, Dash, they all provided nice moves, which we could enjoy from. And from here, from this week, I take it to the Traders Academy Club, and on daily basis, myself and my traders do twice per day sessions, live sessions where we follow our plan, follow and trade our plan. Now it's very, very simple. Our job in trading is very simple. We have to define the money flow direction. We have to decide if we are long, if we are short, or if both directions are possible. Now, when and how do we decide that? We decide it based on weekly and daily cycles. Very simple. Weekly and daily money flow, that's where the big money is. That's where we want to go and join. If we can understand that, if we have correlation between these two time frames, daily and weekly, perfect. We can then go and trade the 4-hour and 1-hour chart with the setups and drive that safely. If we have daily and weekly telling the different stories, then this is normally where we split. We can be only for short or long for the short term, and then we switch directions, or both directions are tradable. That also could happen because the levels of the two time frames give us some range. Okay? And in that cases, normally we accept both trading. Now, after we have the clear direction, sell, buy, or both acceptable, from there, it's easy. You take your strategy which you use. I use my strategies, of course. You can find the list below the video of all the strategies. and apply that. I choose my directions and I trade my directions with the strategist rules. And this is basically the flow, and that's what we do in the Traders Academy Club on a daily basis. And those who are not there yet, I invite you to our family. Join and enjoy. So now we are about to start going over the charts. I will not cover all the charts simply because then I will take the whole Saturday out of yourself and out of myself, which we both don't really want. So what I'm going to cover is the best opportunities and where we should put our focus on. Okay, and we'll explain basically why I do that. So let me just check where we else from. We have Ireland, Poland, Tunisia, Florida, cryptos. That's cryptos, right, John? We're talking about cryptos. Ukraine, Minnesota, and Venezuela. Perfect. Alright, so once again, thanks for joining, guys. By the way, this video would be going after we finish directly to YouTube, so we can always come back during the your free time and check it out and see basically what are our levels. Okay, I want to start with the euro dollar because this is, well, how to say it correctly, the most tradable currency pair in the world. Is there any reason for that? Yeah, from my point of view, no, not really. But this is the fact, right? That's what it is. And that's what majority of traders really interested in. So let's start with that. The euro dollar. Now, technically, I want to start with the weekly chart. The idea here is very, very simple. Let me jump in here. Where is that? Oh, I need my epic pen. Let's see. Okay. Okay, and we are... Oh, you don't see my screen? Now you do see my screen. Alright, so weekly, based on the weekly cycle, basically it's very simple from here. What we have on the weekly chart is a beautiful cycle that starts from here, correcting, going all the way to here. So technically, we can expect the euro dollar even to create a new high. We do form here a potential bullish hidden divergence. Now, it's not really on the best conditions, of course not from this low, but from this low. We do create bullish hidden divergence, which hints that, hey, there's a good chance the bulls are here. But where it becomes tricky and what should we pay attention to on the daily chart? On a daily chart, we did have this. This is a special cycle by itself. Special cycle, in very simple words for those who are not really familiar with the idea, is that the first leg and the last leg are twice or thrice smaller than the middle leg. So if this is X and this is X, approximately, it doesn't have to be right on the pip, yeah? So the middle one should be 2 or 3x. 2 or 3x. This is the idea. Once we had that, we had a beautiful bearish divergence, lower lows, false break 1 and 2. False break means false attempt to create new high or new low. In this case, fake high twice, the false break in a row. In that case, the move down started and it was pretty beautiful. And now comes the very interesting part. What's going to happen from here? Now, the bounce from this zone, those of you who follow me know that I have been looking on 116, 115 area for the bounce. Why? It's very simple. No need to be a genius for that. Looking back here, we can see that this pair has a clear bank zone right here. Bank zone is an inner zone when a lot of orders are located. Now I'm not going to dig very, very deep there, but the idea is simple. There are zones on the market where a lot of money is lying on, and we call it a bank zone because tons of money, tons of order are right there waiting for the money, for the price to reach there, and then boom, activating positions, protections, insurances if we talk about options and so on. So the bounce here was beautiful, And only during the last days of the previous week we could see that finally the euro dollar answers the conditions of a possible triple cycle. Now I want to show that. Here we go. We had one here, right? A correction. We had two here, a correction, and we had three here. Now it might be also developing one, bigger two, and bigger three. That's fine. But basically that's signs of bullish appearance. Since the daily chart was in a bearish cycle before, the one I explained here, right? Since we got it on a bearish cycle, we need here to get bullish stops. Now bullish stops are normally recognized by two ways only: false breaks and convergence, or three little waves up on lower time frame, up to two, down to two lower time frames maximum, and two waves down, retrace and breakout. That's how it is recognized. And from here there are two options. One, we are going to see a continuation up because this was a double cycle down, and we join in a weekly continuation as I was talking about before. The second option is that the euro dollar is now entering a mini break from the bearish pressure before it will develop something deeper, something like that. That's the two possibilities that the euro dollar has right now. Do we have anything specific and clear here for the very long term? No. Therefore, we have to be very accurate and careful in our pickups from here. And what we do is basically focusing on the short term, because the long term is not that obvious. And on the short term we do have better opportunities. On the 4-hour chart we did have one false break, and we can see that right here, right? Break down, break up, tan tan. That's a ring, a bell from the bulls that, hey, not so fast. You reached our area 116, 115. Be careful, buddy. Why be careful? Because we have the bank zone right there, as I showed before, right? So from here, that's where the warning sign started. And guess what? It happened exactly on the level where we wanted, 115, 116, right there. When it happens, we are immediately getting ready for possible retraces up and looking for the buy opportunities. The buy opportunities could happen in two ways: two waves up or a range. That's the only two possible ways based on cycles for the for any pair to complete a correction. That's all, which means we are going to see 1, 2, or we are going to see a range. How range will look like? By two opposite false breaks. So we had one, now this is the top, we might go here and false break it again, reaching again below the middle, closer to the bottom. That's our two options, which in simple words mean on the very short term, from this area right here, from this zone, which is also a resistance zone, also a beautiful trend line zone, right? It's pretty beautiful, all this combination when it all comes together in one place. This is where we would expect a possible top and a retrace to the downside. On the 4-hour chart, we start to see a slowdown, right? How do we see a slowdown? By RSI getting closer and closer to the 70 and 80 level, and also the MACD slowly starts to drop its slope. The drop of the slope on the MACD, the one I use, basically means that the volumes on the bullish side are dropping. That's all. And from here we need to start to be ready for possible sell-off. And as I said, this sell-off could be basically here. This is our zone. We will see it very specifically soon, and it could be back to the middle here and then one more rally, or alternatively, if this is the range that we were talking about before, to start to do 1, 2 to the bottom again, and then with the breakout we can go and look to buy again. Now this is the euro dollar. That's the plan which we have as for now, for the beginning of the week. Further than that, I will of course keep updating on the live trading rooms we have in the Traders Academy Club. Now if we take a look here on the statistical part, we can figure out that we are right on a riding channel. We have this beautiful riding channel, right? And as per top, now check this out guys, the week for us starts on 12, right? This is 11, as you can see here, 11 statistical top, and it's right here. So day before, day after, that's all normal. That's a chance for us to get it happening. Now we have an action zone right here. That's slightly around the 117, slightly above. On the 4-hour chart, our action zone further, so irrelevant at this stage. And also on the 1-hour chart, they suggest us the same zone as the daily chart. So if the euro dollar managed to raise it a bit higher towards the 117, the closer you get there, maybe even crossing it a bit higher, get ready for possible sell-off. What would be a call off of this idea if basically is the euro dollar is breaking straight, like whoop, if it gains some Red Bull in its blood, and then going back in two waves, the critical two waves retrace, breaking it up, and then this scenario turns to be bullish completely. All right. Well, this is basically what we have on the euro dollar. Now there is one more thing we do need to pay attention to. By the way, you know how I erase all these lines all at once, guys? I want to give you some tip. It helps, right? Many lines you draw, you put, and then you want to delete on that. Instead of starting to select every single one, you press on your keyboard Control B, Control A, delete. Voila, and that's all. The game is over. Okay. So if we do have this sell-off here, there is also a very good chance that, as I said, we are going to develop here some kind of ranging pattern before further drop down. Why? Because this, who can tell me what is this, guys? This is, let's see if we have anyone. Beam. Yeah, exactly. Beam. Well, this is what it is. That's a head and shoulders. On majority of the cases, this is of course a reversal pattern. So as long as our critical levels, the trend line, the resistance, the statistical tops from the daily chart, as long as we hold below that, our pressure is bearish, and we should be looking for possible bearish opportunities. What bearish opportunities mean? Very simple. Your strategy, whatever your strategy is, even if it's any of mine, if it's even of any of yours, whatever whatever you use is more than okay. You first of all need to define direction, right? As you know this saying, traders spend 90%, investors, right, the big guys, spend 90% time on value the opportunity, 9% time preparing the plan, 1% time of the time by trading. And the new traders come to the market, do exactly the opposite. 99.9% of the time they're trading, and only 0.9% of the time they're angry because it doesn't work. So remember, it's very, very important. You first of all prepare your directions, preferences, setups, levels, validation, invalidation. So it's very important to have it. Why? Because you know, okay, if it's not working, I have plan B, right? Exactly like when you go to the journey and you got stuck in the traffic, you have a plan B. Or you go to Starbucks, drink some coffee and wait for the traffic to get better, or you look for alternatives, right? So this is the idea, and we have new guys around. Hi guys, South Africa, Georgia. Hello guys, good to see you. Thank you for coming. So guys, that's the euro dollar. Okay, so this is the first opportunity I wanted to cover. I jump in immediately to the pound dollar. Now pound dollar, it's very simple. On the weekly chart, we had triple cycle. Okay, if you have no idea what cycles is, guys, learn that. That's the money flow of the market. Join us, the Traders Academy Club. Learn the cycles completely, fully, from A to Z. That's the money flow. They allow you to define if you are long or short, short-term, long-term. As simple as that. And this is the idea here on the pound dollar. This is triple cycle, which means we are going to put all that Fibonacci on the entire move, which started from 2014 and lost to the bottom of 2016, end of 2016. We are going to here, which is 140, and 146. Okay, this is the top. Now, of course, it could be a bit higher even, but this is basically the levels we are looking at for the price to reach. Yeah, of course, sometimes it goes bigger. Of course, sometimes it even misses a bit, but that's the valuation we have for us, right? The value we know, that's where we're in. So for long run, pound dollar is bullish. Bottom line, as long as, what is the main bottom line here? As long as this low holds, because we rely on this cycle. Now, as long as this low holds, we can simply say we want every 2 waves down on daily or 4-hour chart, because if the cycle is from weekly, we drop down to two lower time frames maximum to find the correction and the opportunities to rejoin. And as long as we hold below this low, every 2 waves down on the daily or the 4-hour chart or the bottom of the range provide us the opportunity to buy. In our case, we are looking for buys for the long term. Now on the short term, on the daily chart, we've had this 1, big 2 and 3. What is this, guys? Triple, special cycle, you name it. It doesn't matter in that case, because the idea here is it counters the weekly. If the weekly is bullish but the daily is bearish, what does it mean? That both directions are completely tradable, which means we should be very careful in picking our positions. What does careful mean in that case? Let's drop lower and see. First of all, what are the levels we are interested in the short term? Now, if we mark this triple cycle, 38.2 would be our first level, which was reached. 50 would be our level, the next, right? And this is simply why I am looking for, if we reach the 128, 127, start looking for the buys for whatever happens. Okay, start looking for possible buys. Don't blindly buy, but start looking for the possible buys. And if not, what do we have here on the 4-hour chart? Here it's getting interesting, guys. We have this range on the 4-hour chart. Look what happens here. We got this correction, one false break, more false breaks on the bottom. We are stuck in the range. But the bottom line here is also very important for the short term. Why? Because check this high, and this high. They are going lower. As long as this high hold, the pressure on the short term remains bearish. We want it or we don't want it, but as long as we cannot break above this high, this means that on the short term, on the very short term, the pressure remains bearish. Now, yes, for long term, we are looking for the buys, but for short term, it still refuses to break that, which in simple words means bulls are not fully ready. If we break above this area, right, retest it and break again to continue the momentum, which means we successfully hold about the level, we can go and long it confidently, because the weekly chart suggests us the 140 and 146. Okay, 145, 146. So that's for the pound dollar, and it's getting very simple. For the bearish, we need to start looking for sell setups on the best levels, and as long as we are below here, we are after sell setups based on the strategies we use. And if the strategy rules that you use provide you these opportunities, go and sell it. Okay. So that's for the pound dollar, and that's all. Now let's go to the crossing between these two guys. I'm gonna see if you have any questions here. Predrag, thank you very much. I'm very happy to hear that. And Roberto, hi to Spain. Great, and good to see you guys. And thank you very much for joining. Euro pound. Now Euro pound also basically simple like the pound dollar. Why? Because on the weekly chart we have this triple cycle. That's pretty beautiful, guys. We had one false break, which means sell. As simple as that. As long as we are below this high, we are looking for sales for the longer run. Right? This is our invalidation. We call that invalidation for the long run. Now for the short run, the idea is also not too complicated. On a daily chart, you can't really see it on a daily, but okay, on a 4-hour chart it will be much more visual. You can drop and see that we had here a special cycle down. Beautiful occasion. And now a false break. Ooh. What does that mean? That we are possibly now moving in some kind of a range before we deciding on the next direction, which most likely would be lower. So to make it simple, I think that the euro pound, as long as it does respect this high for the short term, we should look to sell rallies. It doesn't mean we set a pending order right here and the level says, right? The level say completely does not mean that we blindly sell. For trading we need three things, guys. Three things define a good trading. Level, confirmation, setup. That's the three rules, that's the three steps we all have to work based on. Very simple. That's how I work. Level you reach by cycles, by reading the cycles. Confirmation you get by validation and validation, which also defined by divergences. Setup you find with your strategies. Setup normally come with false break convergence or 3+2, and you apply the strategies into this story. And that's basically what we do, and that's basically how we trade. Okay, so for short term, as long as we don't break here, okay, break, hold, retrace and move up, as long as it didn't happen, our pressure is bearish and I expect it to move even lower. Okay, that's for the euro pound. And let's continue, guys. Dollar yen starts to be very interesting as well. Why? Now let's start from the weekly chart. If you remember, I said at the beginning, we are looking for clear levels. Clear levels come from clear cycle. Clear cycle come from clear reading of the chart. Let's do it together, guys. That's the idea of this analysis, right? Check this out. If we look here, we have a special cycle on this place, and we got a correction all the way down to the 50. The biggest question is what's going to happen from here, because the target was reached of the cycle. Now it's retracing and it's at the middle of nowhere. So technically, normally on such occasions, and that's not a rule of thumb, but normally this leg correction is normally trying to make one more leg. That's normally what tends to happen. But let's agree that the weekly chart at this stage is not too readable. If this one is not too readable, we are moving to the daily chart, which is the next time frame we work with. And here it's a bit clearer. We have a false break on the top, we have a false break on the bottom, which means we have a possible ranging pattern. Currently, the dollar yen has a bearish divergence on the top of this range of this tunnel. Now the thing here is we cannot really rely on divergences inside bigger range, but if they are coming at the end of inner cycle, so cycle inside cycle, and in that case we have bigger range, but this is a double cycle, and every leg here inside this daily range, if you drop to 4-hour chart to see, you will see that this was a cycle, this is a cycle, Here we got triple on the 4-hour chart. Here we got triple. Here we got double. So every move inside this range is a cycle by itself, which makes it valid. In a very simple words, trading words, as long as this stop holds, we should be looking for sell opportunities. How do we define sell opportunities? On lower time frames, we need false breaks and convergence. Or 3 waves down, 2 waves up, and breakout. Now let's check this out. Very simple, guys. Do we have false breaks? 1, 2. Oh, yes. Right? We even had attempt for convergence here, but the problem is that the 2 waves after that created new high. So we are looking for new convergence, which is the break below here. Did it happen? No. What is our alternative? Do we have 3 waves down? And the answer is yes. So we have 1, 2, 3. From this, as long as this top holds, if we get 1, 2 and a breakout, this is a bearish call. From this place, it's good to start looking for sell opportunities. Okay? If it does happen, that means the bears do take the control, and then the targets would be accordingly, guys. On the very short target, we will be aiming the 38.2 of the daily double cycle, which is approximately around the 112 zone. Later than that, we are aiming the possible bottom of the range, which means 109. I know it sounds unbelievable as for now, but hey, those of you who are with me in the club, we called it long from here, from this zone, if you remember. We have been riding all the way back to 113, 114, right? So everything is possible on the long run. This is why it's called market, right? The impossible turned to be possible after a while. So everything that you think, never gonna happen, could happen. And the best proof for that is Bitcoin. Who would believe several years ago, and I have a story by myself that I missed my life chance, who would believe it's going to be around the 7,000? Well, now it's a bit cheaper, but who would believe that? So everything that looks impossible today, possible in the future. That's why it's Mr. Market. So that's for the dollar yen. And then, as I said, if it does develop this scenario, like I suspect could happen, then the idea here is that we have now the chance to be on the very, very best starting point. If we do not hold this bearish scenario and it continued to push higher, the idea is simple, and we are going for the next levels, and the next levels would be, according to this cycle, would be 115, 116 and 117, 118. That would be the ranges that we have here, which also will fit this cycle, the weekly one, with the 61.8 expansion. It's right here. Oh, sorry, it's right here. It's even higher, like 120. So that's definitely possible, definitely doable. But as for now, on the current scenario, at the current movement, the pressure is bearish. And an invalidation scenario for this bearish is break above this high. Now, what most important to pay attention to here, guys, is that we don't force things to happen, we wait for things to happen. We wait for our setup. And that's why we have 3 down, we need to have 2 little waves up, breakout, boom, voila, we have the best starting point. And for us, the traders, the bottom line is not being right on reading the chart. No one cares about how many times we are right when we read the chart. What we do care about is that on the times we are right, we do more profits than we lose on the times we are wrong. This is trading. We are not analyzing. Well, at least for me, analyzing doesn't mean nothing. Preparing my trade, preparing my setup, my scenario, means the whole world. Why? That's the difference between traders and analysts. You know the saying, those of you from the Academy Club for sure know the saying, analysts will analyze tomorrow what the trader trades today. That's all. So never be looked to be right. Be looking to make profits from your views. And this is why you need to have very specific setup condition, validation, invalidation plan, and then follow it. And this is why it's called a plan, because if it doesn't happen, you have no reason to trade. If it does happen, you do have a reason. It saves you by just clicking yes and no for every single opportunity. You have your plan. Okay? So that's for the dollar yen for the days to come. Now let's quickly cover the other yen pairs. I would like to start with the euro yen. The euro yen still stuck inside this range. This range is coming at the top of the daily triple cycle. So technically, while we are below this top, every rally considered to be a good sell opportunity. Okay, and if we take a look on the 4-hour chart, we have this level. So if we can come closer to this area, the pressure, the bearish pressure should start on. It doesn't mean we blindly attack. No, that's not the idea. We don't blindly attack. We are looking for the setups. Now, if you check this out, guys, on the crystal ball levels, look where we are now already. Look what are the next levels suggested by the crystal ball. Look on the days suggested by the crystal ball. Check this out. 11. Which means it could happen right now. If it doesn't happen right now, it will happen most likely 17 and further. So we have 17, 19, 20 on the second class of the days. Pay attention. We might be in front of action. Aussie yen, another interesting pair, and this pair had for us, well, classical. If you remember on the annual forecast on 2000, well, chances you will remember are very small, but those who follow me for a long time now, you should remember this analysis of ours, guys. And we said we are going back to the 2 cycle, right? We reached exactly what we wanted, the 90 level, 90.91, that was our level. Now from this area, look what happened. Oh, sorry. Look what happened on a daily chart. Double cycle by itself. With false break, everything looks really good. We do create lower highs, we do create lower lows, so technically this pair is under bearish pressure. Yes, on the short term we might have retraces up. Why? Because we do have a cycle by itself here. We do have a bullish divergence. So short term retraces definitely possible, but every retrace further, as long as this top will hold for us, we would be looking for sell opportunities. So to summarize it, we can say as long as we are below the 90 level, the same 90 right here, 89, sorry, 89 level, we are looking for possible sells. That's the bottom line. How low can we expect this pair to continue and drop? Basically, we have this first target of the 50, and that will be the 200 moving average from the daily chart, 86, and then we increase that and it will be 84, 50, 85, the 38.2 of the entire weekly cycle. Okay, so that's basically what we have here. Let me check for questions, guys. Natalie, how do you feel about trend lines as indicators to follow? Well, you know what the problem with the trend line is, Natalie? They are so tricky and so individual. Everyone can see something different, exactly like Elliott waves. In Elliott waves, it's one of the most powerful theories ever. I tried many times to become master of that. I failed every single time I tried. Why? Because you know the saying, the amount of the scenarios based on Elliott waves is basically as the amount of the traders analyzing the Elliott waves. Same with trend lines. For some, this would be a good trend line. For some, it's only this. For some, it's only this. For some, it's only this. And I can keep going and going. So basically, it's getting here very, very, very tricky. Now, I do love trend lines, don't get me wrong, but I love them basically to connect this. Look carefully. A, B, C, D. So when I have this kind of move, then I love to connect it and get a breakout. To find that for confirmation and so on, you can use that. If you analyze your trend line correct, you can follow that in multiple time frames, weekly, daily, 4 hour, and then trade lower in these directions. It works. As simple as that. It works if you know to do that correct. Most traders don't know to draw the trend lines correct, and that's why it fails, which makes sense, right? Ashkan, hi from Aurora. Well, we are almost neighbors. I'm like 15-20 minutes from you, Ashkan. Aurora. Actually, I've been looking for 2 or 3 investments in Aurora, but in that market it was not a good idea. So I love Aurora. Beautiful city. Beautiful city. Joseph, edit ways are fine. The market, the market corrupts. Well, I love the saying. I love the saying. My strategy is good. It's the market who is bad. I loved it. I loved it. I loved it. All right, let's continue, guys. So this is Aussie yen, pound yen, which basically all the yens are pretty much the same. Now, pound yen here is a bit more tricky. Why? Because pound, as all the pounds, have this cycle from weekly, which means technically we are good to go to 160, and we could go, and we might go there. So I wish, seriously, I wish we're gonna get this, and then skyrocketing, and we're looking only for buys. But the fact is that the pound yen had for us this move down. So tricky move. Oh, it's even uglier on the 4 hour chart. On lower time frame, on the 1 hour chart, you can find it to be correct. But basically, this is what we could connect in terms of first move down. Nothing I would really be happy to rely on, but on the move up, what it did was false breaks and lower lows. That's a sign normally for a possible range off and then looking for sales. So from my point of view, and get me very clear here, pound yen from my point of view is not the best opportunity to trade from all the yens. I would be looking for sales as long as we're below here. So bounce from this area is more than possible to the downside. Now check out also the statistics and the levels here. Now you see the tunnel here, guys, complete flat. That means no real bearish momentum, isn't it? As per statistics, we also don't have anything specific for these days. We had this stop to be on the beginning of the month, and the second do suggest for us a top. But since then we already had the drop, so to say this is the best pair is lying. For the short term, that would be the levels I would be looking at, between 150 to 150.80. Look for reversal patterns on the candles, like engulfing, like haramis, like hammers, inverted hammers. We can look for false breaks there and try short-term shorts, but for long-term, really not the best pair on my list. So that's basically the yens. Now New Zealand yen, well, I can continue. As I promised, I'm gonna cover the best, okay? Dollar CAD. Now dollar CAD is a beauty. It follows exactly what we want. You should be looking for sales here. That was our plan from the last several weeks after we got the move to the 129, 130. We got the bearish divergence, simply classical. Now what could happen from here? Two easy scenarios. Scenario number one, we're gonna stop the bottom and one more push up just to get two bigger waves to this beautiful cycle. Classical scenario, doable scenario, possible scenario. But as for now, the pressure is yet bearish as long as we don't have any bullish evidence, and we are looking for these targets. The 38.2 of this short, it's right here, slightly below the 126, and then we have the 125. Two great levels to watch. Currently no bullish evidence nowhere, so from my point of view the pressure remains bearish as long as we are below this top, which means every rally like we've had here, like we might have here, we should be looking for possible sell-off. Those of you who are shorting this pair already, the 126, the 125 is the target for us. From there I would be more careful with the shorts. There is a good chance that the bulls will wake up a bit and try to take a short-term control. Let's continue, boys and girls. Australian dollar. Now this is a pair of the last week. Why? I don't remember when on the last time I got so many emails about is it good time to long already or not. Everyone said me it's a trend line. It is. It's a bullish divergence. It is. It is a weekly bullish hidden divergence. It is. But remember what I told you before, that guys, trading is 3 steps. Trading is a level, a confirmation, setup. We do have the level. We just saw that. It doesn't matter what kind of analysis you do. Cycle, trend line, support, resistance, everything is there. Confirmation is there with bullish divergence. Setup, not there. And by setup, I mean simply making higher highs. Do we have a false break here? Nowhere. Do we have 3 waves up here? Nowhere. Do we have higher highs here? Nowhere. Therefore, this pair fails to create the run. I think though that in between 0.76 to 0.75 the bottom is creating, and I do believe that we should be looking for possible buys, ideally slightly lower. Ideally slightly lower. We also have a beautiful bank zone right here, which was respected once. So if we can see this pair pushing to this area, that would be good place to start looking for the buys. So I am bearish yet. I do expect lower lows as long as we don't have one of these scenarios: false breaks, higher highs, or 1 2 3 1 2 breakout. As long as that doesn't happen, no reasons for buys. And you can imagine, maybe you are one of these guys, but you can imagine how many try to buy here and here and here and here and everywhere with this breakout, with this breakout. Everyone is trying to buy because it's bouncing from the daily trend line, right? It's not enough. Level, not enough. Confirmation, not enough. We need to have a setup. We have it, we can trade it. We don't have it, no. Very simple. Okay, so that's for the Aussie dollar. The current momentum is yet bearish, but start to be ready, because I believe that the bulls are coming. Now let's check this out for the statistics, for example. John, thank you very much for your good words, my friend. I'm very happy to hear that. And here's our Aussie dollar. Now we do have, you see that? Unbelievable powerful levels, right? As per statistics, 12 and 13 could be actually the bottom. If it doesn't happen, we go all the way to the end of the month, 23rd, 24. Okay? So watch it carefully, guys. It is coming. And I believe on the next 1-2 weeks, this bottom will form and confirm. Once it does, look for the buys. New Zealandian dollar is bullish as long as we are above this bottom, and the only reason for that is only short-term trading. I would be looking to sell these rallies. So the current rallies that happen, I would be looking to sell them. And the reason for that is simple. Because the daily chart does not provide any divergence for us, which means technically we could see new lows. We do have bearish hidden divergence forming here. On the 4-hour chart, we do have bearish continuing divergence forming there, which means start looking for the possible sell-offs. As per short-term corrections of this double cycle and this triple cycle, we can figure out, special cycle, sorry, that we have a magnet zone from 070 to 070.50, which means if we could see this pair going to here, that would be an ideal place to start looking for possible sells. As long as this pair don't create any lower lows and hold it, the short immediate pressure is still bullish, but as I said, I would be looking for possible stops and retraces to the downside on the period to come. As per levels, figure it out here, guys. We have a beautiful move down on the channel. As per days 10, 11, 14, critical days to look for possible sell opportunities. And no, it doesn't mean you sell blindly. We do wait for this opportunity to be confirmed. Now there are many other pairs, guys, which I'm going to skip right now, like Euro Canadian, Euro Aussie, Pound Canadians, simply because they are not the best to trade. They are a bit more trickier. I'm going to cover them on the very short term, of course, every single day inside the Traders Academy Club, and this is why if you enjoy from what I'm doing, guys, come to our club. You will not regret. We do a live trading there, as simple as that. We have a plan, we have levels, validation, we follow that. No stories, no BS, real deal, and we do deal with that on daily basis. So if you are serious about your trading, don't stop on this video, come to listen from me more. And yeah, I know my accent maybe not the best, but that's what it is. So from here I'm gonna jump immediately to the commodities. The first one I want to start with is the oil. We are still bullish. There are no evidences for bearish. I am long from there on the oil here. Just a second, guys. Okay, I am long here from this moment. Say I mean of course the club. Okay, this is our plan. We don't have any false breaks on the top on the 4-hour chart. We don't have Decker, thank you and take care, my friend. No false breaks here, no lower lows, no 3 waves down, 2 waves up and breakout. As long as this didn't happen, we don't have any bearish evidence. So technically every pullback is an opportunity to rejoin. And as per cycles from the weekly time frames, we can still get it going all the way up to, well, check this out, 60. This is a critical zone and we are approaching there, and then 70. That's the 2 ultra psychological levels where I will be paying attention to. I'm pretty sure that as closer as we get to 60, we will start to get a bearish pressure, and I'm pretty sure we're gonna see that bouncing from there. As for now, at this stage, no bearish evidences. Drops should be use us as evidences for buys. Dave, how can you get to the club? Below this video there is a link for Traders Academy Club. Traders Academy Club. That's a beautiful name, which actually describes what we do. We learn to be traders on daily basis. Me and my team are there on every day. It's completely affordable for every single one. It's only $97 for the entire year. My goal there in the club is clear and obvious for everyone. Give you the chance to become profitable. From there, I send the good traders that are ready to go through live test in private capitals, hedge fund house. Which means when you feel you are comfortable and your result give you this, you stand on the conditions and you think you can do it, get yourself a chance to be financed. So, very simple. You do good, my name do good, my club name do good, and we both earn. As simple as that. It's very affordable for everyone. So, I hope to see you there. Let's continue, boys and girls. Gold. Now, gold is extremely tricky here. Zakir, I am. For more than 12 years, I am addicted. You know, when it's not just the income. It's not just the income anymore. It's a passion. It's a real passion. You know, when you do something and you love it, you can do it stopless. You know that? It's true. I never believed that. It's completely true. When you do that, no, I'm not talking about trading. Forex is not just trading, and one of the reasons why I keep mentoring, simply because it makes me perform the best. I have to perform the best. Otherwise, I will have no privilege to be a mentor online, and my name would not be relevant in this market. I would be like any of the other guys that come, look at me with my Lamborghini and disappear after 2 months, right? Changing the names. That's we are here for more than 10 years now. More than 10 years. So I have to perform the best. That's the name of my club, you know. Work very hard for that. So yeah, I admit I'm addicted to trading. And mainly for the chance I have here to influence. Everyone, I believe so, has something to do in this life. I know it sounds like a cliche, okay? But everyone has something he is good at. I never finished university, never finished studies, never could become anything big in terms of the graduations. I always dreamed to be a trader, and I always dreamed to be entrepreneur. And for me, this is a chance to just excuse me for a second, guys. Sorry. And for me, this is the chance to influence on traders' life. Of course, there are no 100% guarantee, and I will not be able to affect no one as long as he or she decides to do it for real. Exactly like no one could stop smoking if he or she decides that's all. No system, no program at all will ever help him. You need to decide that first of all that you really want to be a trader, and if you do and you are ready to work hard, because my demands are hard, this is the place for you. If not, then simply save our boss time. It's very valuable for our boss. So gold and silver, guys. Now here comes the trick. For long run, we are bullish here. Okay, I would expect, according to this cycle, here, I would expect the gold to make one more push, or at least to continue to move inside this range. Which means for me, for long run, that's buy retraces. On the weekly chart, this is what we got right now. 2 waves, all right, and bigger 2 waves. Now, we could have it pushing a bit lower, but the bottom line is look for buys. That's also from the weekly chart. Now on the daily chart, we have here where it comes tricky. We have this scenario, right? Now it looks like a triangle, which could break, make one more little leg down, and go up. So I'll make it very, very simple. I am long. I'm looking only for longs as long as this bottom holds. Break below that, make a short-term sell valid, possible. And from there, we are going to switch all the buys again. That's all. Silver follows the same plan. So I'm not going to waste your time, guys. Silver has this range. Oh, what did I do here? Okay, this big range. So the closer we can get to the bottom, the better the future buys are. And I believe that silver has all the reasons to go to 20, 24, 25 even for the long run. So every drop look to buy, as simple as that. Let's jump to the indices, guys. I want to start with the S&P. Check what happened here. Now this was an unstoppable rally. For the second time in a row, S&P provided a convergence after false break. Here and here. Also trendline breakout. Here and here. 2 in a row. So basically, while we are below this top, every rally is an opportunity to start joining this journey to the downside. That's the bottom line. But be very careful. Very careful. This is only 4-hour chart. Only 4-hour chart convergence. Not daily, not weekly. Which means it could be a bit early as well. So we must be very, very, very careful here. Trade with tiny risks. There is no reason to go and overexpose. Dow Jones doing the same exactly. We got a false break, and we got a false break, and we have, from here, lower lows in a convergence principle. As long as this top holds, every retrace up is a sell opportunity. Now the trick here is, do not overexpose. The fact that they all provide some opportunities does not mean that we need to expose everywhere. You want to be exposed everywhere, you must divide your risk. So if you, let's say, risk 1% per trade, split it between the instruments. If you split, if you risk 0.5% per trade, split that. If you risk 3% per trade, don't do that, because that's not good for your trading. Basically, you know what? I'll share with you. I've been asked a lot lately, like, Vlad, I'm risking 3, 4, 5% per trade, and I'm catching my head saying, no, why? Because I've been reading that's what you should do. Guys, listen to me carefully. Your capital is the one that you are working the hardest for. Hard. Very, very hard for. Why would you risk it? And then go and cry, complain? Why? Start as low as you can. You have few $100, no problem. Trade the minimum lot size, 0.01, or even macro lot sizes. Okay? Grow 5-10% on your account. You can then increase your risk a bit. Grow 5% more, increase more a bit. Why would you trade and risk so much from your capital? Explain me. To grow faster? Then let me share with you my motto. Trading is only in two ways. Only in two ways. Grow slow but grow, or fast and completely blow. You decide on which part you want to be. Japanese Nikkei did the same exactly for the first time, creates for us the lower low principles. It looks good. While we are below this top, retraces should be using us for sell opportunities. And this crushing dragon or falling star, doesn't matter how you name your candle pattern, looks really, really, really good. I promised to cover some of the cryptos, guys. Bitcoin on previous week, that's what I said I want to see, guys. False break, lower lows. We got it. It's bearish. As long as this top hold and the conversation about postponing the fork, another fork, are on, the pressure is bearish, it's good time for corrections. If you deal with cryptocurrencies, deal even with lower risk than you do in indices. Why? Because these one are moving, especially Bitcoin. So much volumes are there right now. Be very, very, very careful. Now also they're talking Bitcoin switching hands from Bitcoin to the Bitcoin Cash, which could become the next crazy Bitcoin, and got increased on 100% in the last several weeks. For me, the Bitcoin is currently bearish. I would be looking for short-term sell opportunities. I would be aiming for this target first of all, 38.2 of this cycle, then the 50% of this cycle, and then who knows, maybe all the way to this triple cycle 50%. So for me, it's kind of bearish pressure. This is my favorite one, the Ripple. I think this is where the future money is going to be in. I do believe that current levels are amazing for investments. I also believe if we can get it 0.15 or lower, it would be even better. Currently what we do have here, it's higher lows, and higher lows mean the bullish pressure is gaining. As long as it continues, for me Ripple is bullish. I expect it to reach 0.25, 0.26 on the next several weeks, and later on I expect it to fly for completely new high. Ethereum has big triangle and small triangle. The small one was broken, retested, and going. Basically that means as long as we are above the lows of the small, we are moving to the top of the daily triangle, which is 360, 370. For me, I would be looking for buys there. Litecoin Mini also higher lows, it's going good. I would I would be looking for buy opportunities here. And this one, for those of you who followed me on the previous week, should be very happy right now. We called a buy from here, and we are already here flying much higher. I am bullish here, and this is the invalidation zone for me. As for tops, I don't see any reason to limit that, because there is no potential top for flying rocket. And the Dash, same story. We went long right here on this bottom. The trend line was broken, remains bullish. Previous highs at least should be the target for these two. So we are done, my friends. Big thank you for being here and making this first time live session so nice. I enjoyed it. I admit I enjoyed it. I even didn't drink, not even one of my my drink here, not even one time. That's what happens to me when I enjoy. I hope that you enjoyed as well, and I hope to see you in the Traders Academy Club and keep giving you the real tools and the real value you need as traders in the trading world and in the trading jungle. So thank you for your time. I wish you perfect weekend, great rest, good energies, and I hope to see you with us, with our family in the Traders Academy Club. Below the video you would find all the relevant links for my club and for the systems I use, the systems I trade with, and that's all. I hope you enjoyed. Thank you once again for your time, and I wish you only the best. I'll see you in the next week. Bye for now. Oh, by the way, leave your feedback, because I really want to know what you think about it, about this new environment we create. So if you can just leave it below. Don't forget this button, which help us on the exposure future. Share this video with your friends if you think it can help them. It will help us for sure as well. And thank you for that. Thank you for that, and for your great words, your great support. Adios.